If you've been keeping an eye on the crypto market, you've probably noticed that Bitcoin has entered a phase that's making investors stay sharp, hovering between $104,000 and $107,000. The price is moving sideways in what experts are calling cautious optimism. This means that even after hitting recent record highs, the market is treating this slight dip as a healthy correction. No panic in sight. The Fear and Greed Index, which measures investor sentiment, remains steady around 57 points, signaling a neutral but still positive outlook. What makes this stability even more impressive is that it's happening amid major macroeconomic events. The recent interest rate cut by the European Central Bank took a bit of momentum out of BTC, and ongoing tensions between the US and China are adding uncertainty. All of this highlights the importance of understanding what's truly driving Bitcoin right now. Despite these challenges, one major factor continues to support market optimism: institutional inflows. Spot Bitcoin ETFs are still seeing net inflows, showing that large players are confident about the future of the asset. And this isn't just happening globally. Brazilian companies and funds are also increasing their exposure to BTC, thanks to clearer regulations and recent price surges. To put things in perspective, the top 10 crypto ETFs in Brazil saw their total assets under management rise from 12.3 billion Brazilian reals to 13.7 billion Brazilian reals in just 2 months. This shows that even during a consolidation phase, institutional interest is stronger than ever. And historically, when institutions start moving before the retail crowd catches on, that's often a calm before a major breakout. Watching how the giants behave can give you a serious edge in predicting the next big market move. So how high can Bitcoin go? Analysts are feeling pretty bullish about June. Some projections estimate a 69% chance that BTC could hit $110,000, with potential upside reaching as far as $115,000, provided key support zones between $103,000 and $100,000 hold firm. These levels have been showing strong resilience, adding weight to this optimistic forecast. And it's not just the spot market pointing to growth. In the derivative space, traders are heavily positioning themselves for contracts expiring on June 27th, targeting a range between $110,000 and $120,000. Moves like these don't happen randomly. They reflect real confidence that we could be on the edge of another explosive rally, maybe even one of the last of this kind. And speaking of cycles, Swan Financial has sparked debate with a bold take. Bitcoin could be entering its final 4-year cycle. As the market becomes increasingly institutionalized, those long, predictable boom-bust cycles may start to fade, replaced by a more mature environment dominated by institutional strategies. If that happens, the classic euphoria panic cycles that have defined Bitcoin for over 15 years could be a thing of the past. This would mark a major shift in how everyday investors interact with crypto. And if that's true, this might be your last chance to take advantage of the kind of explosive short-term gains Bitcoin has historically offered before the game changes forever. Now I want to hear from you. Do you think Bitcoin will really break above $110,000 this month? Or do you see this current consolidation as a warning sign? Drop your opinion in the comments. I read all of them. And if you want to keep receiving straight-to-the-point updates like this one, with clear analysis and no fluff, make sure you hit the like button and subscribe to the channel. That helps us reach more people and keeps you in the loop with everything that truly matters in the world of crypto. See you in the next video. Until then, stay sharp and happy investing.